Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and we are late. I just flew in from Palm Beach, and my arms are killing me. Ha ha ha. Seriously, I just flew in, and we were delayed. And as much as people want to talk about New Yorkers being tough, one thing that they're not are tough when it comes to driving in the rain. So the flight was delayed. You had a drizzle coming down, and of course, backed up traffic from JFK all the way to my home. So I apologize for being late. We were supposed to be live at 7:30. I knew I was going to be late, but that was because of a scheduled flight. But then they've changed it a couple of times, so here we are. All right, so just back from uh, Florida. As I mentioned, Palm Beach is just on fire. It's just amazing. I was there a couple of years ago, and the mood is completely changed. You can't even get by Mar-a-Lago anymore. I used to go down there. I just ate 3 slices of pizza from Sputino and threw them down my throat. So I'm waiting for people to get in here. Let me check my audio. Hopefully the audio is good. If I can get an audio check, I'd appreciate it. Hey, Jody, welcome. How's the audio? Is everything? Does it sound okay? Talon. All right. So, oh, Jody's not on. She scheduled this a little while ago. Posted that a little while ago. I think this is new. Talon, welcome, brother. It was awesome. It was really. We had a really good time. Was down with my dad, and we did a lot of driving, a lot of scoping out down there, and it's a great state of Florida. My hat off to Governor DeSantis. Great job there. And we saw this is Palm Beach International Airport. Actually, no, I'm sorry. This is the private airport, and they had Air Force One there. And there's a lot of security when you don't see anybody. There wasn't a single soul around this plane, and you knew that you were being watched with drones and every other satellite imagery. God forbid you got 100 yards from that plane. Maybe I was in that vicinity, but I was outside the gate. They would have shot you on sight. And then, as I was coming back from West Palm International Airport, I was waiting for the flight, and I saw this. Trump's own private plane, which I guess he houses down there. That's at the international airport. All right. Thank you so much, Talon. Appreciate that. Good to hear. Well, I'm glad you didn't. Happy St. Patrick's. Yeah, happy St. Patrick's Day to everybody. I just checked the refrigerator, and I see that we have about 20 pounds of corned beef up there, which is awesome. Okay. Let's get to it. Let's talk about, hey, Sean, welcome. Let's talk about the futures action. When I first looked, the futures were up. They opened up. Now, this is a new contract, so this doesn't look right. It's a new contract. New contracts cost more, and therefore you have a gap up. Looks like we're up relative to the close on Friday. We are not. We're actually down. So, futures pulling back here at the open. This is the NASDAQ 100. Let's take a look at the ES. Again, same deal here. New contract. Pay attention to the percentage change. We are down at current. Taking a look at RTY, which is for the most part probably now at or near a bear market, down 0.60%. And EMD, which is the mid cap names, that's down 0.47%. Let's take a look at VIX. And for the volatility index, I want to take a look at an hourly chart. And you can see that we are obviously up. We had a bearish reversal bar on the week last week. Let's take a look at the weekly chart to let people know what that is. This was last week's price action here. So what do? We traded up, which is very bullish, obviously, for the VIX, bearish for equities, and then we closed down. Now, the overall equity market closed down on the week, whether it be the S&P 500, the triple Qs. The however is that they took a lot of wind out of the sail of the VIX, probably too much. So we are holding last week's lows, and they're going to try to pump this up higher. Bollinger Band squeeze is in effect. Stokes, a little bit of weakness here on a weekly chart. These can easily hook up just as they did back here and back here. Let's go back to the intraday view. Let's check out a 15-minute now, see what they're doing. Not much. Not a lot of activity here. Let's check in with the US dollar. Now, the dollar has come under a tremendous amount of pressure these past few weeks. People are thinking that these tariffs are bullish for the dollar. They're not. The reason is that, you have President Trump, who I'm a big admirer of, but I don't carry water for anyone. And what he likes to talk about is President McKinley, who was all about tariffs and how good that was. That was pre-1913. You had three things that happened in 1913 that make today's world, where you have tariffs being implemented, far different than what they were prior to 1913. Prior to 1913, you didn't have the IRS. You didn't have the Federal Reserve. You didn't have an income tax. You had a brief income tax during the Civil War that was done away with, only to come back in 1913. Also, the government is vastly larger now, exponentially larger now than it was in 1912. So we could talk all we want about how tariffs are going to make America great again. Well, if you're going to do that, you had better be cutting government a lot more than what you're doing right now. And also, you need to be cutting spending. So while we're seeing Doge cut costs, so we think, cut costs, cut waste, cut fraud, cut abuse, we're still getting an increase in our deficit this coming year by about $3 trillion. So for the tariffs to work, if we're going to go to tariffs and not just a negotiation tool to hammer Europe, Canada, and Mexico into some sort of a trade deal, then cutting taxes on Social Security, which didn't exist before 1913, which is in effect a welfare fund now, because there's no lockbox that where that money is for Social Security. It was spent years ago. I could have retired three times more I could have had today if there was no Social Security. There's no need for it. They ought to get rid of it. Phase it out. Not for the people that have been working all their lives, but they need to phase it out. Let the younger people put their money into their own trusts, their own accounts, and invest it wisely. If you're going to keep Social Security around for the people that have been investing in it for the past 30 years, 35 years, like I have, then you float a bond and let it run off. You can't rob people of that money. That's not right. That's theft. And it is theft. You stole. I'm going to go off on a tangent here. Were we allowed to invest tax free as you were prior to 1913, and we're able to invest that money into the equity markets, into the bond markets, you would have far more in terms of retirement income than you would by investing in Social Security, which is a joke. And you get taxed on it. It's supposed to be an insurance benefit that you get taxed on. It's all a scam. One big scam. I digress. Let's get back to this. So, yeah, he kept sending me instant messages on in the forum. I expected him here, but yeah, you're probably right. He gave up. I don't blame him, to be honest with you. So, long story short, with these tariffs, it's not going to be enough to cut taxes on Social Security benefits, on tips, on whatever. You need across the board tax cuts because it's not the foreign company that pays the tariff. We pay the tariff. So if you don't want to raise inflation on the American consumer, you need broad-based tax cuts. That's the way to do it. And of course, you need to chop government by more than half. By more than half. You only need a few departments. A complete waste of all the government that we have. All it is, you're buying for votes, and they work for the government. They're on the government team. Okay, so the dollar has had a really bad couple of weeks. In particular, the week of the 3rd. I mean, this is a dramatic move for the U.S. dollar. And the beneficiaries of that move have, of course, been the euro, which had a really good week last week, and it's going up higher. The yen, which had a good week last week, it too is going up higher. And this is the big problem for the equity markets. For those that think that I was happy about the rally on Friday, I was not. I was looking for a washout, and I wanted to put capital to work. Now, we have been nibbling on Boeing and during this sell-off. I booked profits on a big portion of our position on Boeing, which we were building that position back here. And I sold it up and around here, and I began buying it back this week and then last week as well. I don't have the complete position back yet, but we legged back into a good amount of it. I don't think I'm going to bring it back up to the same size as it was, but I think Boeing longer term is going to be a great beneficiary of an expanding economy when we do get that. So let's move on to energy. In the pre-market, we have oil, which is up. I'm going to use a 15-minute chart tonight because we have a lot of 15-minute bars here since we opened up at 6 a.m. or 6 p.m. Oil is up 1.47%. The energy stocks had a great week last week. I suspect that if oil moves up higher, they will continue to do very well. Oil looking good. Natural gas, which had a choppy week last week, is up at current by now a percentage point. Here's the weekly chart of natty gas. Big reversal week. We're holding on to the 5-period rising exponential moving average. Taking a look at what else we want to take a look at here. Let's go to protein, live cattle. They really bounced this back. We're at resistance. I think we're going to double top out here. That's what I think is going to happen. But we're not going to bet that it's going to happen. What we're going to do is prep for it to happen and get short of cattle on a break to a new lower low. Let's see what the IV rank is here. The options are looking good. See what we can get for a call spread, which is a short position, not a long position. People think that you're talking about calls. That means that you're bullish. Not if you're selling them. If you're selling them, you're bearish. No, there's no premium here. None. Nothing to do. You're going to risk 3,900 to make $100. There's no reason to be involved with a tight spread like that. No, there's no money to be made here for option sellers. Option buyers, maybe. Option sellers, nada. Okay, let's get back to commodities. Let's check in with gold. Gold hitting new all-time record highs last week, and I think we're down at current. But I think gold is moving up higher. It had a really good week. Let's check in with the options. Not a lot of premium to sell here. You're not going to get paid all that much. Directionally, you'll do well if you're going to sell a put spread. I think that you're going to make money, but you're not going to make it from IV contraction. Silver also had a very good week last week. We're long of the mining stocks. We're long of silver. We're long of gold. We've been long of these names for a long time now, and they are just getting started. So in terms of silver, silver had a huge week last week. We're coming out of a Bollinger Band squeeze on a weekly time frame. Really, really nice. Back to a 15-minute chart. And we need to take a look at corn. I have a position on corn. Corn up. We like that. That's good for us. ZW. Commodities are in fuego tonight, with the exception of silver and gold. But they had a great week last week. You got to expect a bit of a rest. Wheat moving up higher. Let's go to the weekly chart here, because this was not looking good a couple of weeks ago. But yeah, right back in here. But this is looking very, very solid. Would I buy the futures? Probably not. But in terms of selling a put spread, I would entertain that. IV rank is at 40%. Pretty attractive. Pretty attractive. Let's see if they'll pay us. We'll look at 40-day contracts. Look to sell a 20 delta. 21 delta is fine. Pretty good. Pretty good. What's the return on capital here? That's almost a 30% return on capital. Let's see if I can make this happen. I don't think I'm going to get filled. That's a little bit too good to be true. All right. I just threw an order out there. See if we get hit. But that's almost a 30% return on capital. Again, a little bit too good to be true. Okay, moving on. Let's take a look at, what did I want to go? Oh, soybeans. ZS. Soybeans looking good. So ag appears to be bottoming out. 45% IV rank. So there's premium in those options to sell. Let's see if they'll pay us. Sometimes you have a good IV rank and you look to see how much you're going to get a return on capital, and it's still not enough to put the risk on. That's a 30%. Actually, no, I'm sorry, 25% return on capital. Fees are so expensive on Thinkorswim. Okay. What else did I miss here? We have NASDAQ down 0.46%. Vol we went over. Yields we went over. Oh, no, we didn't go over. We didn't go over yields. Yields are up at current. Okay. All right. We're going to spend a lot of time tonight going over stock chart requests because I did not prep for this. And usually when I don't prep, it usually turns out to be like our best shows. So I'm going to just jump right into it. And I did a little bit of an analysis on what we're seeing insiders do, and I pulled the data off of TrendSpider, and I'm going to be using them right now to walk you through what I'm seeing on insider selling of two stocks in particular. One is going to be Palantir. The other is Walmart. We're seeing a lot of insider selling. I'll show you what I did. So if you're not currently a user of TrendSpider, I call it the poor man's Bloomberg terminal. Head on over, use that link below. You get a minimum 35% discount using my link. Link below on YouTube, link above on the Twitter. And you get all sorts of stuff there. You head on over, take a tour, scanning, real-time quotes, automated technical analysis, so much. It's just so much. Back testing, AI, predictive modeling. It has. Just go over, check it out, and take advantage of it. And I'll show you what I did in a moment. Stick around. How we leveraged their product to identify two good candidates that may be right now good as a potential counter trend rally, but ultimately a short. So let's talk about the economic data coming out this week. Retail sales coming out tomorrow. Empire Manufacturing Survey. They're expecting a negative read after a huge prior read of 5.7. So big drop here to a negative number from 5.7. Maybe that's seasonally adjusted. I don't know. Business inventories come out Tuesday. Lots of housing data coming out this week. We get the FOMC decision this week. There will be no rate cut. I could spare you the time. All you need to do is wait for the presser, and that is what is going to set the markets off. Maybe the statement, they change a word. They didn't use a semicolon when they should have used a forward slash. They'll slice and dice. It's also ridiculous. So the probability of an ease is 1% this month. Probability of an ease for May is only 16%. Probability of an ease for June is 83%. That's up. That's up from as early as Saturday, as most recently as Saturday. And that was because it was in the 70s. Now we have July near 90. So I think the way I interpret this is that market participants are waiting to see what the impacts of trade talks / tariffs are going to, what kind of an impact they're going to have on the economy. Does it slow it down? Do we get pushed into recession? And that's why they are not factoring in rate cuts anytime soon, because Federal Reserve is going to sit there and say, talk to the White House. We can't help you. So multiples this coming week. We begin the week off at a 35.21 handle on the Schiller PE ratio. So let's pause, let's stop, let's think, let's talk about, wow, we've seen so much volatility in the market. For sure, equities are cheap, right? No, they're not. They're still very, very expensive. We're only down fractionally off of recent highs. So do not get lured in. That's why I was very disappointed on Friday with the rally in the equity markets. Granted, I wanted to put capital to work, but I wanted to see blood in the streets. We didn't get it. Some may think that we had blood in the streets. For those who thought that we had blood in the streets last week, they're probably pretty new, right? Blood in the streets is when your blood curdles. You feel kind of sick. And I'm at the point where when I see that, I get the feeling like, wow, this is kind of scary. But then it hits me. Aha. You're probably near a bottom. And then you put capital to work. You have to, the way I put it is that you need to leap into the breach and take advantage of what the market is offering you, which is a forced liquidation event. And those are margin calls. Brokerages are your senior partner if you're on margin. So they will sell. They don't care what they sell. That's why you saw Staples XLP get destroyed last week. They were a leading sector over the past few weeks. They were annihilated. There was no safe haven for the exception of gold stocks and energy last week. Now, the yield curve last week didn't make a new closing weekly higher high. However, and this is why I wanted to see a bloodbath, is that here we are on the yield curve monthly view. We are in the red zone, as I like to call it, where in prior periods we have seen the S&P 500 in gray roll over like it did back here, did back here, while gold is taking off like it did back here, like it did back here, like it did back here to a lesser extent, and like it's doing right now. So, snapshot in time. S&P's rolling over, gold moving up higher. We've been here before. We speak about this, or I speak about this every Sunday night. And my poor members, they hear me talk about it ad nauseum. Natural gas, we know, trades well, very, very strong in this environment where you have a steepening yield curve, and equities rolling over. The only thing that's much different this time around relative to prior periods is that you don't have bonds really ripping up higher. That's normally a go-to investment. What's different now? What's different now is that you have yields climbing over in Japan. And you may be saying, what does that little island over in the Pacific mean? Well, it's the third, fourth largest economy in the world. So there's something called the yen carry trade. You had negative interest rates over in Japan causing a weak yen. So traders were borrowing in yen, buying U.S. equities, and just arbitraging and making money on the spread. That's going away. That's going away now. And that's why you want to wait for forced liquidation in the U.S. equity markets before you step into the breach. So also you have Germany, which has to pay higher yields now because for the most part, the United States has said, listen, you guys are going to have to foot the bill for your own military. The problem is they don't have the capital. They're probably in recession. What do they need to do? They need to borrow. And that means that you have a lot of bonds coming on the market to help finance the militaries over in Europe. And what does that do? It takes away from U.S. treasuries. The Japanese, they own U.S. treasuries. What are they doing? They're selling now. So that's the environment that we're in, and that's the one differentiator now than what we've seen in the past. Bonds, the TLT, they're not moving up higher. But what we do need to do is throw a trend line up here and say, okay, let's at least keep an eye on it, because I think that if we do begin to see a major breakout on the TLT, we're right there. Then things can get real fast in this market. And I may be getting what I'm calling for, and that's a pretty serious pullback in the equity markets. We're not that far away from a significant bottom on a tradable bottom, I should say, not a significant bottom, a tradable bottom on the triple Qs in particular. IWM is really looking attractive. Not as an investment yet. Okay. So let's talk a little bit about what I did. So what I did is I pulled off of TrendSpider here, and I give this away free to our silver and gold level members. So if you're a silver and gold level member, you should have an account here. I went over here and I selected all insider trades above 5 million. And what I was able to do is I was able to export it here. And then when I put it into Chat GPT, and I asked it a few questions. And long story short, I uploaded the document, and after a bunch of qualifying questions, I narrowed it down. Sort by most aggressive selling in 2025 by company. And what it spit out was pretty interesting. And I only look for S&P 500 stocks because a lot of these names I don't know. But the two that popped out at me were Walmart, which got killed on earnings, and Palantir. I didn't go any further than this. I don't really need to. DraftKings is on here as well. Palo Alto Networks, I happen to like as a trade going into the new trading week. There's a Bollinger Band squeeze setting up there. We're going to go over that chart in a moment. But the two I'm focusing in on right now are Walmart and Palantir. So this is what you can do with TrendSpider. You export the data out of here and put it into ChatGPT, and really you're able to compress that data down to actionable, tradable ideas. So we're going to go over Walmart, Palantir in a moment. So I'm going to segue on over, and I'm going to select the request from our members. I'm going to shut it off right now. If you're not currently in our forum, I would encourage you to join up. It's free, doesn't cost you anything. That did not take. I just pasted the link in the chat area. Natural gas, I went over, Jody. Yeah, that's up in the pre-market. So in the feed, we have the requests. And I have these also on my other screen. I don't need to write them down. And let's get right into it. And we got a bunch to go through. Okay, let's do it. ES, MELI. Mercado Libre. It's got to hold 19.95 spot 66. A pretty good close last week. It held support. It held a breakout point. I don't like the daily chart at all. To me, on a daily time frame, this looks like a bear flag setup, not a bull flag, but a bear flag setup. I would be careful here. I'd wait a day or two to make sure that we break out above this upper band of resistance. Let's throw a number on it. If we're going to buy strength, we need to see Mercado Libre closing, not trading above, because you saw it a couple times last week, trading at or above 2052, but it couldn't close there. I need to see it close above 2052. Then it becomes interesting. Not until then. If it fails and we pull back to 1995, I'd wait to see whether or not we hold it. And if we close back down below 1995 again, I think we're taking out this low down here at 1900. So I'm not loving this at all. I think that you have some pretty aggressive selling going on here. You know, granted, yes, Stokes are hooking up. I'm not loving it. It's a show me stock. It's got to show us that it's got the strength to hold 2052 per share. Baba. All right, so the Chinese markets are looking really good. As much as I am not a fan of the Chinese markets, folks, they're doing a lot better than ours are. All right, I don't make the rules. It's the way it was when I got here. The market makes the rules. And you can see that you take off these algorithms, these automated trend lines, boom, throw them back on, boom, and you have a breakout. This is a buy. This stock wants to go up. Daily view. We're popping around here. U.S. equity markets are falling off of a cliff. What's Alibaba doing? Consolidating gains. It's going to move up higher. Bullish. HD. HD, Home Depot is getting annihilated. Bloodbath. So the path of least resistance has changed here on Home Depot. You had your double top the week of the 3rd, confirmation of that breakdown the week of, I should say the week of the 3rd of February, and then your confirmation breakdown the week of March the 3rd as well. So double top, confirmation breakdown, path of least resistance is to the downside. The however is that you're going to get a rally here soon. This stock is pretty beaten up. You have a descending wedge formation. This is going to rally. But that rally is to be sold because the shorts are going to move in and they're going to take it down. A lot of housing data coming out this week. So I suspect that is going to influence Home Depot quite a bit, not to mention that you're going to have a Federal Reserve that's going to be out with their forward-looking statements and their presser. Next chart up. Long story short on Home Depot, long-term bearish, shorter term, tradable bottom. ATOM. The problem here is that it's fallen back down into a trading range. So here's your trading range. We're back down in this. This could trade down to 335. I don't see anything attractive here. The euphoria that you had back here, it's gone. Daily chart, they may make another run here at $6.76. I would sell it into that price point, and I would wait to see whether or not they're able to close it above that mark, then able to do a retest the week thereafter. I do like on a daily chart the stochastics moving up higher. That's a good thing, but I'm not overly optimistic right now on this stock because we're in a new downtrend. On a weekly basis, no less. So I don't like it. I don't like it at all. Now, I'm an opportunist. Excuse me. I'm an opportunist. My job is to say, okay, I am on a drop of a dime. I'm no longer bearish. I've just turned bullish. And when do I do that? On a close above $6.74. Till then, I think we head down to $3.35. You're going to have intermittent counter trend rallies, no doubt about it. I would avoid. Soundhound, great stock, back above 10, bullish, key reversal on the week last week. No breakout though. Stokes on a weekly time frame, trading down below 50. We know that rallies tend to fade. It didn't happen last week, but it sure as heck happened the week prior. Daily chart. Now, we broke out on, where are all these lines here? I must have a new, there we go. Okay. So I think we need a retest of $9.21 per share. Before I got involved with it, it's a very speculative stock. I mean, it was just 3 months ago that we were at $24 a share. The stock has lost more than 60% of its value. So I don't see a reason to go jumping in with both feet, because when you take a look at the weekly chart, again, both lines on Stokes trading down below 50. Is this a tradable bottom? Probably. But I would probably be selling into any strength because I don't think that we've seen quite the bottom yet that people think in this market. So Soundhound, watch for a retrace back down to support $9 to $9.25. I'd be a buyer for a tradable bottom. Rally. If it closes down below $8.39, I would get out. As a matter of fact, yeah, that works. $8.39. PLPL. Oh, God. What do you do? No, there's nothing here. I can't go over this chart. It's against my religion to go over these penny stocks. I can't analyze it. I can't give you a good idea, yay or nay on it. The best thing that can be said is that you have a Bollinger Band squeeze. I don't know how that's going to fire off. If the Stokes are any indication, it's going to fire off down because the momentum's going in the wrong direction. I would avoid this. Don't trade these names. You're throwing your money away. MDGL. This is better. This is bullish. This wants to go up. I like this. A little bit extended on Stokes. However, that's not everything. You show me a close. Excuse me. I'm sorry, folks. It's been a long, long day. You show me a close above 360 per share, and I am a buyer of MDGL. I like it. Let's go to the daily view. Good volume last week on a daily time frame. I think we're heading up here. I think they're going to try to break this out. So actually, this is not a daily chart. Here's the daily chart. Same thing. It's going up to 360. The question is, do we break out? Do we close there? Do we get a retest? If so, buy. Consult your financial advisor. The next chart up is MYE. All right, so I like this. I just threw the automated trend lines here, and we have a reversal bar off of historical support. I'm not talking about one support level. I'm talking about three on a weekly time frame. You saw a bullish reversal bar off of support. This is the value of the automated trend lines. So what I'd be doing here on this stock is that acknowledge the fact that you've had a reversal off of support, and this is probably the bottom for this stock. But what you don't want to do is you don't want to go buying until you get a breakout. Okay. So we'll keep this active for a while. I'm not a buyer until we close above this resistance level where we have our alert. Right now, I set it, I forget it. I let the alerts tell me, okay, time to reevaluate. Perhaps it's time to act. Right now, it's not time to act. It's time to watch, display patience. Again, here we are looking at this on a daily time frame. Here's our resistance level. Here's where our alert is set. But what the chart is also telling us on a daily time frame, we have resistance up here at 14 bucks a share. Again, the value of the automated trend lines. So I like it. I think it's going up. We need to wait for the breakout. ASTS. Weekly view first. I don't like this. I'm concerned about a double top. I like the fact that we've rallied back. I like the fact that we may have a higher low and we're in a triangle formation. That's the bull case. And that's fine. The other way to look at it is let's get rid of this and let's say, okay, what if? What if we continue to roll over and move lower as we did last week? What do we want to do? Well, we first want to watch for a new lower low down below 2461. If we get that and we close down below that mark, guess where we're going? We're coming down here to 1789. 1789 marks the lower band or the lower support level where we found support the week of the 27th. If we put in a lower high and we close down below 1789, that's a confirmation breakdown. I'm not predicting that. I'm saying it's a possibility. For all I know, we just consolidate sideways and we break out to the upside. No idea. This is a show me stock, pure and simple. It was a down week. If you wanted to buy, if we test 2461 with a tight stop below, say at 2164, fine. But I would stay small until we broke out, and that's going to be a while. So patience on this one. Now, the daily chart, beautiful bullish reversal bar on Friday. Watch and see how it opens. Does it gap down? Because volume, I'll tell you, on Friday was not great. So you show me a candlestick like this, it's not only a bullish key reversal day, it's also an outside reversal bar, aka a bullish engulfing, and you had no volume. There's nothing there. There was just a lack of sellers. The buyers were in charge all day long, but there weren't many of them. So just be careful here. Watch for a potential retest of this support level, which I suspect will happen. But if we close down below it, I don't know exactly, let's call it 2749. around there. We close down below that mark. We're coming down here, and then the pressure gets on the stock. So just be careful here. NVIDIA for the lovely Jody. All right, I'm going to tell you right now, I don't like it. You had a beautiful reversal bar, but right now you're trading up and into a resistance level. We haven't seen a washout here. We haven't seen it. I don't care what Thursday looked like, what Wednesday looked like last week. I don't care. I purposely went away for a couple of days to avoid watching quotations and buying too early. And then what happens? They reverse it on Friday. So, listen, it's a beautiful candlestick, but one candlestick does not make a rally. Let's take a look at a daily view. I mean, we had a tradable bottom. That was it. Now, the question is, do we get through all this spaghetti up here? Again, the value of the automated trend lines. I mean, you look at this and you say, okay, we could probably move up higher. And then all of a sudden, you start throwing up your lines and your algos. And all of a sudden, you got a wall of resistance above, immediately above. I'm not a buyer. All right. All right. That's it, folks. I am pooped. I think I got to everybody. If I missed anybody, my apologies. Let me go to comments. I don't want to be rude and not acknowledge people's questions. You're welcome, Tim. My pleasure. Sean, you're very welcome. I love doing it. It's my pleasure. Thank you. My honor for you guys to be here. Don't forget, like, subscribe. You know the deal. TrendSpider. The link below on YouTube, link above on Twitter. Get a bare minimum 35% discount code. Use my link below. Help support the channel. I give it away free to our silver and gold level members. So if you want it free, you want my services, sign up. Go over to thecontrariantrader.com. Again, link below on YouTube, link above on Twitter. Everybody have a great night and a profitable trading week. Talk to you soon.